Today's webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. So today our webinar title is Master the Useful Indicators for Stock Trading. Now, as you know, stock trading requires us to find the precise timing for entry and exit. And today we are going to explore what are some of the common but useful indicators that can help us to find trading opportunities. So my name is Shen Chu. I'm the moderator for this webinar. So before we begin, as usual, disclaimer, whatever we share in this session is only for educational purpose. So in no way that I give any recommendation for you to buy or sell any listed securities that we mentioned here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risk. So it gives me great pleasure to introduce our speaker today. He's none other than Mr. YC Jin. Now, YC is the founder and chief trainer for Shareworld Consulting. He applied technical analysis in his training, mainly focusing on share movement analysis, price volume analysis, indicator candlestick formation to observe the buying interest and selling pressure and further justify the key supports and resistance level. He understands the movement of buyer and seller through the distribution area of banker chips. From a finance and accounting background, he successfully changes his method from fundamental analysis to technical analysis with the invention of his trading strategy. And today we will be very honored to have him here to share with us his strategy. All right, so good to see you here, YC.
Hello, everybody. Can you hear me? If all the audience able to hear me, can type one, so that I know that you all can hear me. Okay, cool. Okay, I saw several replies. Okay, thank you, Shen. So I will start my presentation. Let me share my slide first. Give me a second. Okay. You see the slide, yeah? Okay, so today our topic will cover three parts. The first part will be the moving averages. Okay, then the second part will be the Bollinger Band, BB. We call the moving averages MA, and we call the other one is BB. Okay, which is the short form of it. Okay, so the last one will be the trading volume. Okay, so we will be covering three parts. Okay, let's start. Okay, so moving averages. So if the audience, some of you might have the experience in the market already. So you all will know that the moving averages basically is to determine the direction of a trend. Okay, to determine the direction of a trend. Okay, basically is that it will take the average of the price of a period of time, so that to determine whether the current market trend is uptrend or downtrend. Okay, basically this indicator is a confirming indicator. It's basically is a lagging one. Okay, it's not a leading indicator because the price move first, then only it will start calculate the average of it. So basically is that it will be a slower one to just to confirm the trend. Okay, but it will be useful for us to know that whether the counter is in a good trend. Okay, so let's see the setup of it. Okay, so basically we usually will look into two types of the MA moving averages. The first time is the EMA. The second type is the SMA. SMA is the very simple one. Basically is that, okay, you add up the total of that period of the prices, then you divide by the total period of it. Okay, basically is that very even. Is that, okay, just divide. Okay, so the other one is the EMA. EMA, basically it will take more weightage to the data which is more current. Okay, basically is that it will be more sensitive to the recent data, recent price movement. It will react to it more sensitively. Okay, so for those traders, some of them, they like to use EMA because like the short-term spike in the volume or spike in the prices, so they were able to see it more obviously in the EMA. Okay, like will react to the short-term price movement. So they think that, okay, they were able to react more quickly to the recent movement. But it depends on which one useful for you all. Basically, two types also okay one, because for us, we just use the moving averages to determine the trend, as I just mentioned. So if you want to use EMA or you want to use SMA, okay one. Most importantly is the setup of it. The setup meaning which days you use. Some of them they use the long-term one, maybe 200, 240, meaning the average of the 240 trading days of the prices. Okay, some of them they might use 200 days, some of them they might use 100 days. So the most importantly is the setup, which we will be sharing later. Okay, so basically the strategy of the moving averages is the cross of it. Okay, the short term cross the long term, meaning the short term prices is going up. So the trend for now is going up. Okay, so the short term prices is going more strong than the long term prices. This is called the golden cross. Then for the death cross, which means the long term price cross below the short term one, meaning to say that, okay, this currently the trend is going down. Okay, then for us, we like to use the short-term moving averages setup, which is the for us for me myself, I will be using 5 days, 10 days, and 20 days. It's considered very short-term already. Some of them they asked before whether it's a need to use the 3 days moving average, but for me it will have a lot of fake signal, fake confirmation. So we will advise that if you really want to use for the short-term setup one, the shortest you can go for probably is moving average of 5 days. Okay, 5 and 10. Okay, then you can combine with 20 days. So 5, 10, 20 is considered the short-term setup of mine. Okay, so until this part, if everybody okay, you can comment a MA for me. You can comment a MA for me so that I know that you all know the short-term setup. Okay, thank you. Thank you. Thank you. Okay, I saw a comment. I've seen a comment saying that, okay, I might be speaking too fast, so I will slow down so that you're all able to understand. Yeah. Okay, so basically is that generally speaking, some of them they use the MA 20 days as a short-term moving average setup. But for me, MA 20 is basically is a monthly moving average, because within a month they will have usually 20 days of the trading days. So move MA 20 usually for me is a monthly MA. Okay, so I will add MA 10 and MA 5. Okay, my students all know this. If I think some of them will be here. Okay, so some of them they use MA 60. Okay, 20 plus 60. This one for them is the mid-term one. Okay, so if you want to have a long-term one, you can mix 120 with 240s, which is half a year and 1 year. Why 1 year is not 365? Because you have to calculate only the trading days. Okay, so 1 month is 20 days trading days. So 1 year is 240 days. Half a year is 120 days. So basically they will use half a year with 1 year, this of the MA setup to set for the long-term setup. Okay, but for me, I will be more focusing on the short-term one. So if you are a long-term investor, you want to confirm of a stock, the trend of it in a long-term basis, you maybe can choose to go for MA 120, 240, or you can mix with the mid-term one. Maybe you can mix 60 days with 120 days. So this is the range that you all can be flexibly switching around. Okay, but for mine, I will usually go for the 3 setup one, which is MA 5, MA 10, and MA 20. Okay. Okay, let's see. Okay, so this is a very easy picture to see whether the stock is in an uptrend. Meaning, because as we just mentioned, the moving average is just a confirmation of a trend. So it will be lagging one. So the price move already, only it will calculate the average. So in this case, you can see, okay, the price slowly goes out, then the moving average also slowly goes out. So in this case, it's a very simple, very obvious uptrend. Therefore, this is a sideways. You can see the price up a bit, then come down again. Up a bit, then come down again. It's like not obviously going strongly uptrend. So in this case, it's a sideways. The same goes to the moving average of it. The moving average is going like sideways. It's not going up, slowly going up like just now. If you are spotting maybe those strong momentum stock, like recently maybe SMRT, you can check the short-term moving average later, like after this talk. Then you all learn something. You all can able to check yourself. You can see the short-term moving average is going out very strongly one. Very obviously can see it's an uptrend one. Because the changes of the price is just happened recently. Meaning if you are using the short-term moving average, you're able to catch the changes in the short-term prices. Okay, if you are using like maybe long-term, maybe 240 days moving average, it will be very slow to detect the changes, the rapid changes in the recent moment. Okay. Now, this one is another example of an obvious downtrend. You can see basically is that the price goes down already, and then the moving average slowly coming down also, following the price one, because the moving average, as we mentioned, is a confirmation signal, it's a confirmation one. Okay, so for downtrend stock, a lot of people they like to bottom catching. Okay, a lot of people they like to bottom catching. Right, recently the CFM also it drops a lot, but I believe that during the stages of dropping, a lot of the retailer they might think that, oh, this price, this stock currently the price is dropping already, so they want to catch it. It's not to say that bottom catching definitely is we say 100% losing one. No, it might have the chance that able to catch a strong rebound, but the overall risk will be much more, I would say that. So we will usually share to people that it will be better for you to catch for the uptrend one, meaning the stock price going out, then the moving average is below it, meaning the stock price is moving above the moving averages. Confirmation. Okay, so if you are like to buy the dip, buy on dip, okay, you have to set a very tight cut loss, very tight cut loss, because overall the trend is already coming down. Then yet people still like to catch it. Why people have this mindset? I share something to you all. This one is after we discussed with other traders. So we realize this is that people think that certain stock, they used to be in a certain range of price. Let's say stock A, it used to be 1 ringgit. Or it shoot out from 60 cents to 1 ringgit. Okay, maybe it hit 1.2. Okay, 1.2 ringgit, and it start dropping. Okay, when it start dropping, maybe it breaks 1 ringgit. It breaks 90 cents. So it's already switching from uptrend to maybe downtrend already. Okay, meaning the trend is not as strong as earlier already. But people have their mindset is that, oh, this stock currently is selling selling to me at 90 cents. It used to be 1.2. Okay, 1 ringgit 20 cents. So they want to buy it. They think that they use the previous high or the previous range of the price to determine that the value of the stock. So they think that, okay, the price is already coming down, so they want to catch it. So maybe 90 cents they think is cheap, but they never see the chart. They never see the chart movement. Okay, this is the thing that after we discuss with other traders, so we realize this is basically the psychological mindset of retailer. Okay, so they will think that, okay, 90 cents now is very cheap already. So maybe when it drops to 70 cents, or they think cheaper, so they keep buy the dip. When you buy in a downtrend, your risk is very high. Okay, this one is the example of it, but this one is very extreme one. But you can see others. Others, those if it's trending below moving averages, if it's trending below moving averages, you can see maybe below MA20, because it's the monthly MA. You can see if it's trending below MA20 or MA10, the chance of you to lose money will be higher. It's not like 100%. In stock market, it's not 100% one. Nothing is 100% one. But we can say that what we are learning here today is to increase our chance of winning in the market, just to equip ourselves with some knowledge so that we're able to avoid some risk. Okay, so we would advise is that to skip those downtrend stock. Okay, because trend is our best friend. Okay, follow the trend, because usually let's say if you buy a stock in the uptrend one, let's say if you chase high, this is the habit of most of the retailer. If you chase high, okay, it might retrace a bit, but if it's still in the uptrend, meaning it's still in above the moving averages, you still have the chance to wait until the stock to go back up to go back up, okay, because it's still in the uptrend. But if you're buying in the downtrend one, downtrend you buy, it rebound a bit, you're happy, but it will continue to go down because the risk of it is higher. The trend of it is downtrend already. Okay, so for this part, moving averages, this part, you all have to remember is that the moving averages is a confirmation of a trend. Okay, then it's more advisable for us to choose those uptrend counter, which means the counter, the price is trading above the moving averages one to trade. Okay, this part all okay. If okay, comment a okay for me. It's a really simple part, but it will help a lot. Okay. Okay, so the next part is another indicator, which is the Bollinger Band. We call it BB. Bollinger Band. So basically, we use the MA with the BB. Okay, so the Bollinger Band, let's see. Okay, very easy. You can see got three lines here. The middle one basically is the moving average of 20 days. Okay, the middle one. Okay, the brown color one. Then it has an upper one and a lower one. The upper one basically is the, like theoretically, it says that the upper one is the resistance of it. Meaning what is resistance? Resistance meaning if the price goes up to that zone, potentially it will drop. Okay, this resistance. Okay, resistance is the place where the supply comes in. Okay, the supply comes in. Then the lower one, you can see the other line is the lower band. The lower band is that theoretically is a support zone. Support zone meaning during that zone, the demand will kick in, meaning the stock price will have people to buy lah. Okay, why I say theoretically? Because if we trade using Bollinger Band, we usually not much seeing this one. This one is theoretically how people play with the Bollinger Band. But the risk also quite high. You know why? Because you see, when the stock price drop below moving average of 20 days already, it hit the lower band. Theoretically, it asks you to buy when it's downtrend. You understand me? When the price is going down, it asks you to buy at the lower band so that you are expecting a rebound. When it rebound to the mid band, which is the MA of the 20 days, you sell it. This is the theory way. But for us, you would think that it will be higher risk if you are trend following people, because it already breaks below the 20 days moving average. It is already like going down already. So you are buying it to expect it to have some rebound. If the rebound zone, if you didn't sell, it might drop back again and it will drop further. You have the chance of it lah. Okay, so the same goes to, it asks you to sell at the resistance zone, the upper band resistance zone. Okay, but the thing is that usually after you learn this, you go and check those strong momentum stock. Okay, strong momentum stock. Okay, you can go and check. Meaning you will see that those like strong stock, when it hit the upper band, it wouldn't stop there one. the theory way asks you to sell at the upper band, but in real life, you will realize that those strong stock, it wouldn't stop at the upper band. It will continue trending above upper band, meaning you will miss the big trend stock. Okay, you got what I mean? So that's the reason why I share theory way first. Then after that, I will share with you all the usually trading way of us. Okay, so you have to understand the concept of the Bollinger Band first lah. So that next we will look into the actual way of it. So until here, we can have a small conclusion is that Bollinger Band, the upper band acts as a resistance, the lower band acts as a support, and the middle band, the brown color one, is a benchmark. It's a benchmark, meaning if the price below the benchmark is going down, then you buy when it near support, and when it rebound back to the midpoint, when rebound back to the benchmark zone, you can sell it. Okay, when it above the benchmark, then you sell at the resistance, then wait for it to drop back to the benchmark zone. This is the theory way. Okay, so theory way understand already. Can you comment a 3 for me? Comment a 3 for me. So that this is the theory way. You have to understand the theory first. Then only we look into the real life strategy. Okay. Okay. So because my style is that I will need to let all the audience know the thing behind it, the knowledge behind it first. Then only we look into the real life sharing, so that easier to understand. Okay, so this one is the we said Bollinger Band breakout strategy. Okay, so basically is that this is the thing that we shared just now. We call it BBB. Basically, it's BBB. Bollinger Band is BB. Bollinger Band breakout is BBB. Okay, so it's very easy to understand one. So basically, is that okay? You can see in this chart the last part of it. You can see that when the stop price hit the upper zone, it never stop one. It never stop one. This is the pattern of those strong stock. You can see maybe SMRT or others, those strong stock. They always act like this because the momentum already started. Okay, the power already kicks in. Okay, meaning when the stop price hit the resistance, it never stop. It will break above the resistance. It will break above the resistance. Okay, so this one basically in short term, usually maybe 2 weeks time, 2 weeks to 3 weeks, but 2 weeks is already very a lot already. Usually in 2 weeks time, it will continue trending above the zone. Trending above the zone. If a strong counter, it trend above the zone for 2 weeks, you will have had good profit already. But I can also share with you all is that for me ourselves, I wouldn't hold for 2 weeks also. When it goes out, when buy when it's near breakout or buy before the breakout, when it break out, then we will sell first. Then when it retraces a bit, then we will buy also. Within the zone, meaning you buy when it slowly goes up, come down, goes out, come down, goes out, come down. So it's a very smooth uptrend. So you trade along the counter, you trade the counter along the way, along the uptrend way. Okay, so your chance of winning is higher. That's not 100%. Okay, I can share with you all very sincerely. If somebody tell you that the strategy is very good strategy, 100% can win one, basically you don't trust lah. Because for me ourselves, when we share, when we do education, we will also be sincere saying that there's no 100%. Just that the chance of it is higher. The chance of it is higher. Okay. So this is the part when the Bollinger Band breakout strategy part. Okay, which means next time if you see certain stock, it started to break above the upper band. When it started consolidate, especially those consolidate for a long time one, meaning the Bollinger Band is going sideways one. It's going sideways one, no movement one. When it suddenly breaks out above the Bollinger Band, you will see the Bollinger upper band and the lower band start to goes up like that. Okay, slowly going up, 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 up. Okay, divergent going up, 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 up. Okay, like this, like the last part of it lah, in this chart. Okay, it means that it started to have the strong wave coming in already. This one is provided it breaks up. If it breaks down, then you have to say bye-bye to the stock already, because it has chance that it might trend down. Okay, because that one is Bollinger Band breakdown. This one is Bollinger Band breakout. Okay, so we trade the breakout, we sell the breakdown. Okay, so this part, if okay, comment a BBB for me. Then we will go to the last part of it, which is the trading volume. Then we will go into the case study. Okay. Oh, let's see. Okay. So quite a lot of comments. So thank you for the comment. Okay, I've seen a Q&A as well. Peter, can you show us online SMRT share? Later, if got time, then I can show. I can share with you all. Trading view the SMRT share. But for the Q&A, we will leave it to the last part lah. Okay, to the last part. Okay, after we share all the strategy, all the theory part, then only we will go for the Q&A. Okay. So I've seen quite a lot of people comment BBB. So I will assume that you all at least get something out of it. Okay, so we go to the trading volume. Okay. Actually, this slide, this presentation, although there are only a few slides, but basically we talk only the important parts. Okay, we share only the important parts. Then there are still a lot of things to learn in the market, in the share market. But in this topic, we share the thing that we think important for people, which able to be learned in 1 or 2 hours. Okay, so for the trading volume, okay, trading volume, this one I must say that okay, a lot of people, they see volume. How they see volume, how they study volume, they every day they go to top volume. They go to top volume list. No wrong, this step is correct, but the next step usually they do it wrongly. Next step is that they will see which counter has the top volume. Then they will think that, okay, this counter, you see, volume kick in already, lai liao, volume lai liao, okay, volume kick in already. So the next day they will go and buy. Usually this is how people work, how people trade, you know. Because like earlier I've been in the security firm that time. Then we see people talking. They also think, okay, this counter, we will ask how they see certain counters. Then they will see, oh, this counter, especially those like we will say old style people, no bias, no bias, okay, they will see that, okay, they will only study the volume. But the thing is that those top volume in the list, the counter in the top volume list, usually is the penny stock. The penny stock, one counter only like few cents. So you will see the volume a lot. Okay, so they will think that, okay, this counter want to goreng already. The operators start coming in because got volume. But if you notice, maybe in a daily basis, you can see that we in the top volume list always have different penny stock one. It wouldn't like focus on one penny stock. So it means what? It means that if you see the volume like this and you straight away buy like this, usually it's very high risk, because first thing, you buy a penny stock. Second thing, the concept, the reasoning behind is only saying that because of high trading volume, so people go and buy the stock thinking that some operator is coming in. You get what I mean? Is that you give you leave your profit or loss to people. You think that, okay, the operator will do something. But why don't you leave it to yourself? If you have some knowledge learned, you're able to analyze better. Okay, so trading volume, this is a very important part. Okay, first thing first is that don't trade penny stock. Don't trade penny stock, because people think that, okay, you have 100,000. If you buy those 1 ringgit counter, you can only buy certain unit, very little unit. if you go and buy the penny stock below 20 cents, for me it's penny stock. Okay, you buy the penny stock, people think that okay, I can buy a lot of shares. But in terms of percentage, actually it's the same one. You invest 100,000, no matter you buy penny stock or you buy those we say not penny stock. Okay, if it goes up 10%, you will earn 10K. If it goes down 10%, you will lose 10K. So the percentage wise is the same. So you don't look at the like people think, okay, I don't want to buy stock above 1 ringgit. Some people have that mindset, but for those penny stock, maybe it wouldn't move that fast. Okay, maybe it's like maybe 10 cents. But if you want to wait it to go to 11 cents, 12 cents, it will take longer time. But if certain stock, if let's say it's going uptrend already, okay, then it will from 1 ringgit, it will go to 1.2, maybe in very short one only. Okay, so don't see the trading volume like that. Okay. So later we will discuss how to see it, but just for now, I just want to remind that what is the mistake that a lot of people they took. Okay. So basically is that high trading volume, if going up, if the price is going up, then it comes with high trading volume, meaning this counter still attract a lot of people attention. Okay, simple as this, simple as this. So if the counter, you can apply the strategy that we learned just now. You combine the moving average, you combine the Bollinger Band. Okay, if the stop price start to go out above moving average, if the stop price start to go above the the benchmark zone of the Bollinger Band, then if better, it can break above the Bollinger Band upper band, BBB. Okay, if all this okay already, then it comes to be high trading volume. Basically, this trend already solid already. Okay, already solid lah. Okay, so it will go up because when the times it go up, basically the volume will follow one. The volume will follow one. If you see those counter, it goes up. You have BBB, you have moving average, stand above moving average, but the volume didn't catch up. Usually we call it as a low float counter. Like this counter, you buy in, it will easy go up, it will easy go down one. So usually this kind of counter, you have to skip also. You have to skip also. Those like illiquid counter. That's why we have to see this trading. Not like the first two already got, then you have to chasing. No, you have to see whether the volume catch up or not. If the volume never catch up, basically this one is we call it fake one, fake one. Because volume cannot lie one. Volume, this one I have already shared to my student many times. The chart you can do, people can manipulate on the chart. Like, okay, I eat out one lot so that this counter hit their price, hit the breakout zone, hit the resistance zone, or hit the support zone and rebound. You can manipulate on the certain zone, but you're not able to manipulate on the volume, because you want to create volume. No matter how, you have to put money one. Like for me, let's say like me as a trader, let's say if we want to break a certain zone, definitely I need to buy I need money okay, I need to key in the orders, the buy order to break the resistance. So the volume cannot lie one. If this one is an illiquid counter, maybe I queue certain queue, make the buy queue lose a lot for people to buy up the sell queue. But this one is not the solid one. Maybe it's illiquid, so I can manipulate on the chart. I can manipulate on a certain zone. But if you want to have a solid breakout, you see those high trading volume counters, the one you can see the traded value also. The one is the real one. The one cannot fake one. Okay, so volume is very important, because basically it's the only thing, I would say the only thing that cannot be fake in the market. People might argue, oh, hey, Mr. YC, you say that the volume cannot fake one, but you see operator, they keep switching hand, buy sell, on sell one. Okay, yes, they might have the chance, but no matter how they make it, they will still need to have money. They want to sell to themselves using other accounts. They want to buy up their own counter, okay, using other accounts, because same account you cannot buy sell, okay, different accounts, okay, proxy accounts, okay. they want to manipulate in that way, you still need to buy up, you still need to sell down. So the volume itself cannot line one. Okay, this one is the first thing I want to clarify with all the people. Okay. So basically is that if the stock price going out, the volume catch up, this one is solid one. So then the downtrend one, if the downtrend of it just started, let's say just started the breakdown. Let's say if stock A, it consolidate for a long time, then suddenly it breaks down with huge volume. Basically this trend also we wouldn't trade already, because high chance it will continue to go down. Okay, when it go down, then the volume will go higher, meaning more people sell. Maybe you can see CFM. Okay, one of the example. Okay, it breaks down already. People think, oh, cheap, then it breaks down again. People think cheaper, then it breaks down again. Wow, breaks until you also cannot believe how come they have so many stock to sell. Okay, so we see the one is high trading volume. Then the low trading volume. Okay, low trading volume, you have to bear in mind is that if a strong uptrend, when it goes up until a certain zone, when it start going sideways, usually during the sideways time, the volume will shrink one. The volume will be getting lesser. Okay, it's not like 100% it will go down one, but it basically means that the period no much clear direction. People, those like huge buyer, maybe they are like waiting the retailer to sell. They are flushing the retailers. You have the chance. The other thing is that if it continue to go sideways until one day it breaks below the MA, because that's how, as we mentioned earlier, strong uptrend, it needs to trade above the moving average one. Okay, until one day you see the volume getting lesser already, and it start going down of the moving average. So this is the part that we will basically exit. We wouldn't see that counter until it have a strong confirmation saying that it's coming back. Okay, this is one of the way lah. If the volume coming down, meaning the interest getting lesser. Also, if the other meaning is that when it consolidate already, but it never break down the moving average. Okay, it still maintain above the moving average. Okay, until one day it might spike again with increase of volume. You can see Pertama, JSB, those highly controlled counter. Usually they'll happen like this: going strong uptrend, sideways for a while, then strong uptrend again. Okay, you can monitor because it will stay above the moving average. Maybe you can put a mid time frame one, MA 20 probably. Okay, it will stay above there as long as it didn't break below the MA with the when uptrend that time the volume already start decreasing, meaning no much people buy sell already. Okay, it start consolidate and it start dropping below the moving average, meaning the trend already not solid. Okay, but the other way around is that if during a downtrend stock, you can see when the volume start going lower, meaning okay, this part also no much people sell already. This thing also I have been sharing a lot to my student earlier. Like some certain time when you feel the market is very bad, for now still okay, because for now the SVB case is a really sudden case, so you can see the sell down is very huge in the short term. But if you're thinking back like few months back, the market is like no active. Okay, it up a bit, then it down 3-4 days like that. There was a few months back, the market the stock market act like this. Okay, that time is that people think that okay, like no much interest in the market already. Then you have to monitor on the volume until certain zone, the volume start getting smooth, start getting like flat already. Meaning that is the point where people more much want to buy and sell. What does it mean? Meaning people don't want to cut loss already. Those who wanted to cut loss, they cut loss during the downtrend. Then until certain trend, the volume start no more volume. Okay, it started no more volume, not much volume. Meaning at the zone is that zone where people think that this is the reasonable price. Okay, the people they wanted to sell think that okay, until this long I don't want to sell already, enough already. Okay, I hold the ticket. Okay, Then those people who want to, bottom catching, thinks that, okay, enough already. Okay, I will just wait. So at the zone, the volume it will be very low, Okay, so usually people say that, wow, market no active, no active. But for me, if the market no active, I wouldn't think that this is a bad thing or a good thing. I would think that, okay, it's good as long as like January, that time market is very hot. Then when market start coming down in February, I will still think that is a good thing. It's a good thing. It's a good sign because market is too active. So you need to have some time for the market to cool down. It's a good thing. It's a good thing. So you don't see the volume in that way, in the earlier way, in the old way, saying that, oh, market not active or no chance. Never mind. Market not active is good also. It's a period of cooling down for those people like making the market too hot. Okay, so everything is good. Everything is good in the market. Depends on how you see it. Okay, like for example, when the market is very hot that time, volume keep coming in. Then you're able to, we call it, not to say chase high, you can chase the breakout. Okay, you can chase the breakout, meaning the stock, for example, just now what we learned, the Bollinger Band breakout. When the Bollinger Band, let's say if you spot a counter, just break out. If the market sentiment is very good, you can chase in. Okay, but if let's say in current market, you don't chase off, you wait for the breakout, then it will retrace a bit. Then you join during the retracement. Later I can show example if got time. Okay, so is that what market also good? Depends on what your strategy is. If you are using the breakout strategy, chase breakout strategy in the current soft sentiment market, then high chance you will think that, hey, how come every time I join, then the stock price will come down you will feel that way. Okay, then if you are using those wait for retracement, the strategy in a very hot market, maybe in January that time, then you will feel that, hey, how come every time I want to wait for it to retrace, then it never retrace it never wait for me it will straight away go up one. You also will have some of the people, they will have that mindset because they're using wrong strategy in wrong market. Okay, this part, all the theory part, all clear. You comment okay for me. Then we go to next thing more deeply. Okay, so meaning is that you only to see the market sentiment. Like for now, I also trade very cautiously, very defensively. The defensively, this word I also been sharing, I think quite frequently in our member group already. Like tell them trade defensively because the current market is acting like this. So you don't want to risk your position too much. Okay, you wait for retracement, you wait for it to go near the support zone, only you can consider an entry like that. Okay, so here's the thing. Let's see. Okay, so basically for example, this one VIS, you can see it trades above the first thing first. You have to measure it trades above the moving average. The first topic that we learned, moving average. You have to measure it trades above moving average, meaning this one is the good counter. As long as the trend at least safer a bit. So we can see the last part of it is trading above the brown color zone, the brown line. What is the brown line? The brown line, like we say just now, this one is Bollinger Band. Bollinger Band, the brown line is the MA20. It's the MA20, okay? So the MA20 meaning that in average basis, the stock price is moving above the average, meaning the stock price now is safe. Okay? So first thing, then the second thing is that, okay, when it start breaking out the Bollinger Band, okay, basically this is another we will call it signals that this one is going to the strong uptrend already. Okay, it might have the chance. So you have to combine everything. So you can see usually when it going up that time, it will have the volume to support one. It will have the volume to support. Then the zone that you can see below the brown color one, when it is coming down until the last part of it, you can see the volume not much already. But this kind of counter also we wouldn't look into one unless it goes above moving average again. if the counter moving below moving average, or you don't need to everyday monitor it one. You don't need to like to see it whether it breaks above moving average. No need one, because you wait until the confirmation time, meaning the stock price started to come out above the moving average. Only you can look into it. Better lor, save your time. Or else you every day you wait for it to cross above the moving average, or we wouldn't know how long will it take to cross above the moving average, or it might not cross, it just keep going down. Okay, so we wait for it to have a confirmation, it start going up already, only we look into it. Okay, usually all this, if you can set the filter in the trading view, you can set okay, I want to see the counter above moving average of 20 days. So you just look at those counter to do your analysis. Easier for you. No need to see all the stock in the market one, because some of them is not performing well at this moment. So you have to have your own filter in order for you to look into only those strong counters. Okay. This one is another. This example is a very good example of the BBB, the Bollinger Band breakout. Like we discussed earlier, if a stock is going sideways, for a period of time already. Sideways meaning no movement, up down in that zone. Usually no much volume one, because sideways interest usually not much one. You also no need to trade sideways waste time only, because up down in that zone. So you until a certain day, okay, you spot it. Usually it will be in the top volume also. But this counter you have to compare the chart, like I just mentioned. You go to top volume list, this step is correct, but you don't trade penny stock. Okay, so you go to top volume and you see those counter which is just coming out one new counter. You can see, oh, this one is a new counter, or test cycle, a new counter. Why? How come today start going into the top volume list one? Then you click into it, click the chart to learn. The chart just started to break out. You do like this. The first step, no wrong. People usually do the first step, go to top volume. This step, no wrong, correct. Just that the second step, you have to see along the list, what is the new counter being added in, not the penny one. Penny one, Chincai, they trade already have a lot of volumes already, because penny okay, so you don't see the penny stock. Okay, so in this case, you see the test cycle. It breaks the sideways. It breaks out the Bollinger Band upper band. You can see from the chart with volume. You can see during the sideways, the time no volume one. Then until certain stage, it breaks above the we call it the Bollinger Band breakout. Okay, Bollinger Band breakout. Okay, then you can see, like just now when we talk about the Bollinger Band breakout, the part, I share that if the Bollinger Band breakout already, it will go like this. Okay, it will go like this. Okay, it will go like this, started to go up. You can see exactly like the chart. Okay, the upper band will going up, the lower band will go down. Okay, meaning the divergence started to hit in. This one is the momentum. When momentum kicks in, the time it will show like this. It will show like this. Okay, so this is a very strong counter back then. Okay, so if you able to spot this type of counter, it will be very good. I would say like this counter is better than the VIS case study that we just shared just now, because VIS, the one is already a bit of the uptrend already, and because of some news, then it jump out. Okay, it breaks out again. But for this is that, okay, earlier there's no much of the buy sell. It's just acting in that sideways zone. Until one day, volume kicks in, buyer kicks in, it breaks out the Bollinger Band. It also comes with volume. This one perfect timing of a start of a trend. If you're able to spot those counter like this, you can share also. You can share to your friend, study together. Okay, this type of, we call it chart setup. If you're able to find, then you will have more room, because it's like from sideways, it turned to uptrend. Okay, switch of the trend. Okay. Okay, let's see. Okay, this one is the other example of the Bollinger Band breakdown. Like we discussed earlier, I said you have to, if you want to trade BBB, you have to trade Bollinger Band breakout. Okay, break out. Okay, not to say break down, because if you people think that okay, it breaks down the Bollinger Band already. People think that okay, the Bollinger Band, lower band as a what? As a support ma. People will think in a theoretical way. That's why, just now as I mentioned, I share to the audience the theoretical way first. Theoretical way is that people say the Bollinger Band, lower band as a support, but we wouldn't treat in this way. Too risky already. You see in certain stage, certain cases, when it start to break down the Bollinger Band, it will keep coming down one. You can say, oh, Bollinger Band, lower band as support. Those theoretical guy, usually too risky already. You buy at the lower band, it come down again. You buy at the lower band, it come down again, meaning wow, you will be losing a lot. That's why in order to learn the strategy, we have to learn the theoretical way first. To learn the theory out of the indicator. Okay. Then only we learn the actual way, the real life way of it. Okay. So until this part is the case study part, we all able to know that, oh, just now what Mr. YC said earlier, now I can understand better in the case study. You all can combine together. Okay, so until this part, all okay. You comment a okay for me. You comment a okay for me. Okay, meaning you all able to know, oh, just now we learned the theory already. Now we learn case study. Oh, so we cannot use the theoretical way, which is buy at the lower band of the Bollinger Band. Very high risk. It will maybe keep coming down. Okay, so you combine the theory and the real life one, you will know which one is like more practical way. A lot of people they learn why they lose money, because they use the indicator in an old way. Like for example, we say RSI. It's not in this today's topic lah. I just raised this point out. Okay, like RSI, sometimes people think that okay, RSI above 80, theoretically above 80 is overbought already. But you will encounter certain cases is that okay, the RSI above 80 already is still going out. Then if you above 80 the time you sell, maybe you will miss the last few days spike. Okay, so for me, RSI above 90, basically this one is really hot already, too hot already. This one is really overbought already. For me, it's 90. But in theory, if you go Google, if you go maybe YouTube, if you go read books, it will say or 80. Above 80, this zone is overbought. But in real life, above 90 is basically, not to say confirm lah, but 90% above is overbought. Okay, usually above 90 it will retrace one. 90 to 95 if certain stock hit like this usually it will retrace one. Okay, this one is the practical way compared to the theory way. This is the different law. Okay, but no matter how, we still need to you know learn about the theory way first. Okay, theory way first. Okay, so let's see. I think that's all for the chart. Then okay, so okay, I make a conclusion first before we go into Q&A, and also I will go into the Bursa Academy function first. Okay, so conclusion is the first thing. We follow trend. We follow trend first, which is the moving average. You can set up short-term one, which is for me is 5, 10, and 20, but I see 5 and 10 more. Second one is the Bollinger Band, BB. BB in a hot market, you're able to filter more strong counters. Like in current market, if you look into those Bollinger Band breakout counter, it will be very little because the current sentiment is not good, okay. So the second thing is the Bollinger Band. Bollinger Band, don't trade using the old way, okay? Because you trade using the old way, it means that you sell when the stock price just want to go up. You buy when the counter want to go down already. This is the old way, okay? Sell at the upper band, buy at the lower band. So we don't use the old theory. We use the Bollinger Band breakout theory, which is the stock price breaks above the Bollinger Band upper band, meaning this stock very strong. It's strong until it breaks out the resistance of the Bollinger Band, which is the upper band. Okay, so you have to understand this. This is the second part. Then the third part is the trading volume. The trading volume now I add on one more point is that if you spot the strong counter at that time, it has already gone up in prices. Okay, it has already gone up in prices. Meaning, for example, this counter today already up 20%. But you see this counter as a Bollinger Band breakout counter. Breakout already, but it has up a lot. So you don't chase. You wait for it to retrace. Usually, after the stop price go up strongly, it will retrace one. It will retrace in low volume. Bear in mind, it breaks out, it will come with high volume. High volume. In the chart, you can see it's a green bar, green volume bar. Okay, meaning it's a very, very strong, comes with the trading volume breakout. When it retraces that time, bear in mind is that if a good counter, healthy, we call it healthy retracement, healthy counter, meaning potentially it will go up in future. Those counter, it should retrace in a low volume basis. Low volume basis, okay? And the low volume is really obviously low one. It's not like yesterday is 100 million trading volume, then today is 90 million, but it's a red color. It's a retracement, meaning it's a drop day lah. But the volume is 90 million. That is too much already. The low volume that I mean here is the obviously low one. You can see one bar is this much, okay, this much high. The other bar is maybe half of it or little or way below it. It's a obviously low retracement volume. So we call it healthy retracement, and it will usually retrace for 2 to 3 days. And the volume you can see is a healthy retracement one. It's like a ladder, like a ladder, healthy retracement like this. Up, down, 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 down like this. Okay, healthy retracement one. Then one day it will up again. Okay, it's an N shape. It's an N shape. Okay, this one is the trading volume part. So if you miss the breakout zone, you can buy during the retracement time. Safer. Okay, so basically this one is the part of our indicator presentation. So before I go to Q&A, I will show you all the Bursa Academy function, which is one of our today topic also. Then later we will have probably 30 minutes for the Q&A. Okay, let me share the screen first. Actually, Bursa, it gives a lot of the function also, but people might not be able to use it. Okay, let me see. Trading portal. This one is the Bursa portal. I will show you all how to log in first. Bursa Academy. Okay. So able to see the share screen for now. If okay, comment okay for me. This one I will show you all some of the important part of a trading platform functions. Okay. So you search Bursa Academy, then you go inside, you go to you log in because for me I have already logged in. So then after you log in, you go to simulator. Then you go to the equity simulator part. Okay, equity simulator part. Okay, then you log in. Basically, this thing is the same as the real life one, but this one is the virtual the function given by the Bursa. Okay, just for the people to familiarize themselves with the platform and the important part of it. And me as an educator, for this year, I'm the first one to share with you all about this topic. Okay, so if anything you want to ask, you can ask. But before that, I will let you all know what is the important thing that we will see as a trader. Okay, so after you all log into a trading platform, usually for this is end-to-end. Okay, then you're able to see this home. Then you're able to see all this is the we call hot stock lah, is the top volume stock. So as we discussed earlier, is that you go to the top volume, this step is correct one. Bear in mind, this step is correct one. Hold on. Just that you need to skip the penny stock. Okay, you can see. Okay. First thing, you see the top volume list, you avoid the structure warrant. Able to see, is it very small? Let me zoom in. Let me zoom in. Okay, now it's bigger. Okay. I can see. Okay, we see the important part first. You can see the top volume. You can see, okay, probably a lot of different counters. My advice is that you skip two things. First thing is the penny stock. Penny stock, for example, like this M-tronic, like just now, before we go into here, we discussed the time I mentioned already. A lot of people, they see top volume, they will think that this counter is coming out, so they will go and buy. Like in this case, probably some people, maybe they didn't join this webinar, so they just see our M-tronic or this counter or top volume list coming up already, so they will go and buy. Some of them, they might react like this. So this one is we will say is a high risk ad lah, because penny stock, people think that, okay, if it goes up one bit, then they will be able to earn a lot. But the thing is, it will be very difficult for you to buy at 1.5 cent and sell at 2 cents. Why is difficult? Because you see, if you queue here, you can see, can you all see the big quantity there? If you queue there, got 43 million people queue in front of you. Okay, so you queue there, then you expect to get a ticket and you sell at 2 cents. And you see 2 cents? 2 cents got 30 million queue sell. Meaning you have to wait. If you queue at 1.5 cents, you have to wait for the people to sell 43 over million first. So only your buy queue will get matched. After your buy queue get matched, then only you start to queue at the sell queue. Then you have to wait until people eat the 2 cents, eat more than 30 over millions. Only your sell queue will get matched. You understand this? So in practical way, this one is very hard to achieve one, because in practically, if you queue 1.5 cents and you get matched, probably by then, a lot of sell queue of 1.5 cents will be there already. Meaning you're able to get the 1.5 cents, but the sell queue already is 1.5. Okay, 1.5 cents, meaning you're not able to sell at 2 cents already. So that's the reason we always skip the penny stock, because practically it's very hard to earn between the bigs. You're able to understand this? Okay, if okay, you comment a 3 for me. So this is the thing, this is the reason behind that we say you just skip the penny stock. People think that it is very easy to achieve because one bit, I just want it to go up one bit, then I'm able to earn maybe 25% or more than that. Okay, like for example, if you're able to get 1.5 cents and you sell 2 cents, you're able to earn 33% or 33%. You buy 100K, you earn 33K or you think, you imagine also you're happy already. Okay, but in real life, it will be very hard to achieve. You all remember what I explained just now. Okay, is that you want to get 1.5 cents. First thing is very difficult to get already. If you're able to get, you will be scared one. Meaning a lot of people they throw at the 1.5 cents. Okay, so you're not able to get one. Even though you're able to get, you want to queue at the 2 cents to get sold, also very difficult. Meaning you are expecting some people to buy out a lot of units at 2 cents. Only your 33% of the upside will be achieved. Okay, so you don't see the penny stock part. penny stock part, like this, the same as others are like this icon, or like CFM warrant. CFM warrant, but it has already gone down for many days. Just that it is not in line with the mother stock. Mother stock today also rebound a bit, but the CFM warrant not much rebounded. Okay, but this one is the other topics. Okay, we skip the discussion of it. You see this one, the PUC. Okay, let me scroll for you. The PUC. Also, you see the PUC is very penny. It's very penny. You are expecting maybe you buy 2.5 cents and you get sold at 3 cents. But in practically, it will be very difficult to achieve this. You are expecting people to sell 92 million for then only your sell queue, your buy queue able to get matched. And after that, you queue sell at 3 cents. Then you are expecting people to buy out 15 over millions. Only your sell queue will get matched. Okay, so it will be really difficult to achieve all these. Okay, so we skip. You see the top volume, you skip penny stock. Okay, first thing. The second thing, you skip structure warrant. You skip structure warrant. What is structure warrant? You see all these HSI, CLI, HSI, CL4, HSI, blah, blah, blah. Not only HSI, others also, in today's case, don't have, but all these are issued by the bank issued by the, not to say the bank is not good, just that this structure is this thing, this underlying thing, I mean, this financial instrument is very, very high risk. That's why I would advise people to skip it. Okay, this one is basically it's like you go to Genting, you are betting against the banker. It's like, okay, the mother stock goes up, then you buy the warrant, then you are expecting the mother stock to go up again, so that you can sell back to the banker, you can sell back to the bank at a higher price. Okay, I have a friend is the market maker of this. Okay, he also already told me a very clear fact is that a lot of people they are trading those structure warrant one, consider not to say 80-20, is basically 90% is lose money one overall, because it's too high risk already. That's why you can see those people they're able to earn using the structure warrant usually is the bank themselves, because they issue to you the time, you are buying in the premium already. Okay, and also they will have the time decay, meaning you hold the, like, okay, for mother stock, you hold the mother stock, you hold 1 year, 2 years, also no problem one. But for the structure warrant, the total lifespan of it usually only 9 months, for example. The longer you hold, the more you will get lost in the value. Okay, this is how they earn money. Okay, so this is the you have the strategy to earn using it also lah, but this one is another topic. So in overall, we are advised is that skip the penny stock, skip the structure warrant. Then only you go to the other counters to look into it. For this capital A, this one is not penny stock. Then you can look into it. You can go and see the chart whether it's trading good. For this SMRT, okay. But for this Hong Seng also you can skip. You can see Hong Seng already in the top volume list for many days already, but it's still very high risk. Okay, so this one I cannot say too much, but anyway, it's very, very high risk counter. Okay, then others you can see so for those Mastron also, Mastron is not a tradable counter, it's a invest like long-term holding counter, because the bit of it, like maybe you buy 40 cents, but it's very difficult for it to out to 42 cents, for example, to earn the trading income. Okay, so this one is the pattern of the stock. We call it pattern of the stock. In Mandarin, we have another term, 股性. Okay, but anyway, this one is the all the thing that we should look into. But like for this CSH, also penny stock, also been in the top volume list for long already. So all this is that don't need to see lah. You see all these healthy AAX Artronic recently just started to go into the top volume list, so you can go and look into it. Understand what I mean? Is that those newly added counters are you can go and see the chart whether it's good. Okay. And okay. So basically this is the part for the top volume list part. Okay. Then we can see other functions. Other functions such as what? Like people when they as a trader, you go into a platform, we can see the upper line. Okay, this line. I'm not sure whether you can see my pointer. Okay, which is the market sentiment. We call it market sentiment, which is okay, like the trading volume, whether the trading volume is high or low, whether the trading value, you can see this one, the money sign one, is the trading value. The trading value basically indicates that how many people putting in money, how much of money is being put in the market, like that. Usually you can see sometimes the trading volume is a lot, but the trading value is little. What does it mean? It means that the currently active counters in the market is the penny stock. Okay, because penny stock, a lot of volume. You chincai buy also a lot of volume already, but the value of it is little. Maybe you buy 100,000, you can buy a lot of unit, but the value is only 100K. Okay, so the volume is high, the value is low. So all this is some like little signals that people can look into. Okay, to know that okay whether market is active. Okay, sometimes you can see that the volume is low, but the value is very high. What does it mean? It means that maybe today, those active counter is the big cap counter, which is the KLCI component counter. Usually the kind of market usually means that those, we call it the countryside people, meaning is the like those EPF, okay, those people like those fund people, they are supporting the index. Okay, but usually that kind of market, usually those small cap, mid cap all drop one, only the big cap is standing. Okay, this one is a little things that extra knowledge, we call it extra knowledge for people to know, because you want to explain of this platform. Okay, then the last thing is that the gainer and the loser, the gainer and the loser. So it's very obvious one, the gainer and the loser. You can, like for today, like this morning when you open the market, before I started this live presentation, I already shared, because the loser, once it open the market, the loser it goes up in a very quick way, meaning today market already from the morning already start panic already. So I already share to the students is that today market still loser more than gainer. All this, if you are able to see maybe 9 o'clock over, it started to appear very fast way, then basically the day itself, you will know already. Okay, but not to say 100%. Maybe like from the morning, a lot of penny selling. Okay, huge selling. Then maybe until after 3 o'clock, 4 o'clock, market start recovering. It has the chance. Just that all this is the thing that we as a trader we will look into to know that the market sentiment. If the market is not good, we call it not good. A lot of people say, market not good. But market not good, what can you do? You have to think like this. You don't think market not good, then you do nothing. Market not good, you have to think, what can you do for now? Like for me, okay, market not good, then I will still go and study the market. I will still go and look for those stock, which is like maybe uptrend, then start retracement, healthy retracement, or it's just started to break out, but is like healthy retrace, just started break out one. Those like, okay, maybe it provide a chance of entry. Okay, so all this can do one. All this is the thing that we can do in those soft market. Okay, so this is basically the important parts of a trading platform to let people know what is the stock active, but you have to know what is the thing that you have to look into. Don't like what I mentioned earlier, don't follow those old mindset, chase only those penny stock, too risky for you already. I've seen a lot of people trapped into the penny stock. So there's the thing that even during my physical presentation to university or to security firms guests, I also will tell them, you go and see top volume, no wrong. Just that you have to skip all the things that I mentioned just now. Structure warrant, penny stock, skip. Okay. Then the second thing is that all this you all know already, the order book, portfolio, all this you know already. Okay. If you want to know more, you can go to the off market. You can go to the off market. Off market basically means that what is the not to say fishy thing, what is the special thing happening out there? Special thing happening out there. Okay, is that okay? People, some of the time you can see people crossing the stock in a higher price. Then you have to think of, how come for now they're able to buy in the market in a cheaper price, but they still want to cross in the DBT for a higher price. This one is the off market. Off market meaning is the DBT, direct business transaction. Basically, it means like this. It's like me and you, we agree a price, then we go to the broker and say, okay, we want to sell and buy at this price. You just help me to cross it. So this one is not the market price one. Usually it will different one. So from here you can see something also. From here you can see something also. Okay, but today it's not. It's just morning. Maybe in the afternoon you will see more, especially after 4 o'clock, 4:30. You can see more of the transaction. This is one of the things that you can look into also. Okay, will it be too difficult? All good. If okay, comment okay for me. Comment okay for me. Okay. Sometimes you will see that, okay, usually if crossing a big block, then you can look into it. Because if crossing a big block, meaning you have to think of people selling this huge block, they must have a buyer with this much of money to buy out one. So maybe, just maybe, maybe something might be happening. Then you can go and monitor that kind of stock. Okay. Like for this, you see the volume only 800K, 260K, 20 million, please. But this one is not active, not active counter. Okay. So not liquid. Like CHHB, all this, like the volume is too low already. So not much to look into. If a certain counter, the volume is very, very big, then you can go and monitor it. Maybe only it will have something to happen like that. This is the thing that we see. Okay. So the last thing of this thing, the last thing of this platform is that to read on the depths. Okay. You can see the right hand side this part. For example, let's see. Okay, maybe okay, SMRT. Okay, let's see. From here you can see the info of the counter. Okay. Usually all this you need to see much one. No need to see much one. If you want to see, you can see the market cap, share issue, all this, and also the buy rate, buyout rate. But this one also we wouldn't much look into it. For us, the important one is the business done and also the time and sales. Time and sales basically is the okay, the buyout and the sell down situation. But the business done is more important, meaning what is the transacted price, transacted value at certain zone. This is the thing that you all can learn to read. Okay, so in this case you can see the buy volume. Okay, the sell volume. In certain price is like this. So the total value is like this. What you need to read out of it is that if you are doing intraday trading, other than you are looking for the 15 minutes chart and a 1 hour chart or 5 minutes charts, you can read also the business done. If there's a zone, there's a price which is highly volume traded over there one, that is usually the zone for the intraday support and resistance, meaning the zone is the critical price. We will call it as a critical price. Okay, like for example, for today, okay, this 53.5 cents. Okay, you can see the total volume and the total value transacted here is a lot. So basically, probably this zone is a very important zone. So why this zone is a very important zone? You can go and see the market depth. Okay, I can go and see a market depth. Okay, basically this zone, but the market depth, this one is too little already. You all can go and apply for 5 depths. 5 depths. 5 depths is a really minimum one. 3 depths basically is this platform. It's just training for 3 depths. If basically you do some trades within a 1 month basis, you all can apply to your broker, to your remiser, to your dealer to get the free 5 depths info. Easier to read. But if you are active trader, I would advise you to go for the 10 depths one. For us, it's 10 depths. We can see 10, meaning we can see 20. We can see 20 buy sell queue. Okay, so it will provide you better info. You can see, how come the after the five depths, all is a fake one, all is a very little one. All these is the little things that you can study. Okay, if you are active trader, you can apply for free for the 10 depths. If you are not active trader, but you think that it helps you, you all can pay some money to get from the broker also can. But for me, the one is if you are active trader only, it will be more useful lah. Okay, so basically this is all the things that you should know: business done, time and sales, market depth. Okay, so this part is the sharing for the Bursa Academy part. You all can play around it. If all okay, you comment a 5 for me. Comment a 5 for me. Okay. For what I share today is all the important parts. You all can go and play around it to from your platform. Okay. Then what I will look is the market depth. Because my market depth is 20 depths in total. So I like to see it. Or can see a lot of things. Personally. Okay. So basically, that's all. So let's see. Okay. Thank you for commenting. Then we will go into the Q&A. Okay. So Shane, you want to say something, or I just continue?
If you have any question to ask our speaker today, please write them in the Q&A box, not the chat box, so we can address your questions accordingly. All right. Yeah, I think many of them said learn a lot from you, YC.
Thank you. I always like to share. So if you're all able to learn something, it will be good for me also. So you all have any question? We have 30 minutes. You all can just key in the Q&A sections. Then I will look into it.
Yep. So the equity trading simulator will offer you a virtual trading account for you to practice your trading strategy based on real-time price feed. So it is a software that Bursa has invested a lot of money to develop. So make full use of it. So Nurul Amira asks, what time frame of chart is it suitable for short-term and long-term?
Short-term and long-term. It depends. Okay, because some of the people, they think that short-term, some of the people, let's say fundamental people, they think that short-term is 3 months. But for me, short-term maybe is 3 to 5 days. You know what I mean? Is that you all have to know what is the thing that you all looking into. So for me is that if you are asking for the time frame, no matter you are fundamental or technical, or you are day trader, or you are trend trader, what I would advise is that you have to see day chart. Okay, this one you have to bear in mind. You have to see day chart first. This is the same. I share what the thing that I share here. If the important one is the same as what I share in the member group or my student. Look into day chart. Day chart, it gives information which is more solid. A lot of people, they like to play intraday. They like to see the price moving up and down. They will feel very active. They will feel very excited. So they look into 5-minute charts. They look into even 1-minute chart or 15-minute charts. But for me, I will always advise is that you go and learn for the day chart first. You day charts, you master it. You know how to see the support resistance. You know how to draw the formation. You know how to draw the breakout. Okay, you understand all the things. Then you apply the same strategy to a shorter time frame. Then a shorter time frame, I will skip the 30 minutes one. I will see the 15 minutes one, 5 minutes one. 1 minute one, usually I wouldn't much see because in the platform already got. Okay, you don't need to go to TradingView to see the 1-minute chart. No need. You go to your trading platform, maybe for the SL Force one, like M Plus, Maybank, usually already got lah. Okay, Maybank. Okay, so I will see from there for the 1-minute chart. For the 15-minute chart, for me as you want to spot those potential bullish counter during day, you go to 15 minutes cuts, 15 minutes chart. Okay, so yeah, so you focus on day chart first, then you can refer to 1 hour and 15 minutes chart. That is what I would advise. Oh, Waikid, thank you. Yeah, he says that I'm one of the students from SWC team, and thank you. Yeah, so basically, yeah, my student can prove that what I share today is the same as what I share in the member group for those important knowledge. So basically is that we want to let the public to learn the correct knowledge, Like I mentioned just now, you all go and study YouTube or whatever, or books. I also start from books one, but a lot of the strategy is not applicable in the Bursa market. So you all have to know, like earlier I also studied Bollinger Band from books. But I feel that how come it's not as useful? Then after that I know, okay, this is another thing that we should look into. We have to practice it in another way. Okay, so I hope it helps. So let's see. Okay, the other audience asked,
I think you need to clarify more on the Bollinger Band method.
Yes. Okay.
Yeah.
For the Bollinger
Use
Band,
it on the chart
for
to
the
illustrate.
Bollinger Band, let's see. Okay. Let's see. I show to you all. I open my chart. Hold on. Okay, a lot of people they are asking this. They are asking about the Bollinger Band. Let's see. Okay. So basically Bollinger Band, right? You just go to the indicator and you search Bollinger Band, Now basically it will come out already, Bollinger Band. Okay, this one, Bollinger Band. Okay. So you just click it. You no need to switch the setup one. Okay, hold on. Okay, you see the setup. Okay. If you are from one of the old style, okay, like many years back, okay, I tell the story. Many years back, Bollinger Band is not actively used in the market one. Okay, but after that, some people start to use it. Then in 5 to 7 years back, there's another group of people. They prefer to use the line of 10. Okay, they prefer to use the line of 10. Shorter of the range can see the better stock movement for them. Okay, so you sometimes, I'm not sure if you heard before, sometimes if from outside, some people they ask you to switch to 10. But for me, what I will say here is that you just use the standard one will do. You no need to change the setting. No need to change the setting. No chart, man. Got chart or not? No chart, man. Got chart. I see comments say no chart. Really? You all able to see the chart? No. Hold on. Sorry.
We are seeing your email.
Really? Oh, hold on. Oh. Hold on. Sorry. Not okay, Dick?
Yes.
Okay, good. Yeah, and then I have to repeat again. Okay. Okay. Never mind, I repeat again. Okay, I repeat again. Okay, you can see from the Bollinger Band here. Okay, sorry. You basically, if you want to use the Bollinger Band, you just go to indicator and you type Bollinger Band, BB. Just you type BB also come out one, BB Bollinger Band. Okay, you just click it, then you're able to use it. Okay. Then then you will see the chart like this. Okay, so I repeat again. So you don't need to change the input one. Some people they change to 10. Like I mentioned just now, because you can see the 10, if you change the length of 10, you can see the chart is more, some people say more neat because it's the range is not as big, like really ugly. They will feel that it's more neat. So it will be moving along the range. This is what the people think. This is the strategy that developed 5 to 7 years back by another gang of people. Okay, but I never use this strategy. Okay, I will still stick to the original one, 20. So this is just an extra info for you all. Okay, so you just stick to 20. Then you see here. Okay, like I mentioned just now. Okay, very easy. You see this part. Okay, you see this part. Is it Bollinger Band breakout? Yes, but no volume. The volume is little. The volume is little. You can trade also, but the volume is not that active. We will say the volume is, you see, is very little. Okay, very little. So another part is here. You can see, this one is another Bollinger Band breakout. Bollinger Band breakout. Okay, Bollinger Band breakout. Okay, let me remove it again. You will see clearly this part. Okay. What does it mean, Bollinger Band breakout? It means that, like we discussed earlier, it breaks above Bollinger Band upper band. It breaks above Bollinger Band upper band. Okay, like here, look. Upper band is here, okay, so it breaks above Bollinger Band upper band. Then now let's discuss again. In theory, people, what they ask you to do, they ask you to buy at the when it retraces back to the mid zone. Okay, if it's above the mid zone, then you buy, then you sell here. You sell when it hit the resistance of the upper band. This is the theory way. The same, but imagine this. This one Bollinger Band breakout already. Okay, if you are buying here, then you sell here. Okay, it hits the resistance already, theoretically ask you to sell here. If you sell here, then you miss all this. So theory way can only refer. You have to use the practical way that we have noticed from the chart pattern. Okay, so this is the Bollinger Band breakout. Why this part is more solid? You can see the volume. The volume, okay, nice volume. The volume is breakout also. Okay, the volume is more than the average of the earlier part. Okay, started to kick in already. Okay, another confirmation is this, the 16th of the February, this part. Okay, the volume more and the chart moving out more. Okay, this first part, this is the second part. Okay, this confirmation, you see, from this chart reading, you all can think back what I shared just now. Volume have to kick in, solid volume, Bollinger Band breakout. Okay, all this is the solid info that we put into the practical one. Okay, then also you see it will move along the way. You see, along the way. All this is the strong counter, and as we mentioned just now, usually if the counter acts like this, it will have at least usually, but not 100% one, 2 weeks. We use it on average is 2 weeks. 2 weeks time of upside. 2 weeks time of upside. Okay, 1, 2, 3, 4, 5. Okay. Hold on. Please jump out already. Let me share again. Okay. Able to see. Okay. You see, 2 weeks time. 2 weeks time. Meaning, from this part until here. Here is 2 weeks. Okay, that's why I said 2 weeks, 2 weeks to 3 weeks, but we said 2 weeks already enough, 2 weeks. If you imagine 2 to 3 weeks, it's ngam here one. It's ngam here one. 2 to 3 weeks, ngam here one. Because in a short-term basis, you cannot expect a counter to keep running for 1 month, 2 months. It's too much already in the short term. Too much already. So we are usually expecting 2 weeks, 2 to 3 weeks. Okay, as a benchmark, you put 2 weeks probably. Okay, so meaning this counter run from here 1, 2, 3, 4, 5 days, 1, 2, 3, 4, 5 days until here, 2 weeks. Also enough already. Get what I mean here? All these from this chart reading, you all can combine all the things that I shared just now during the webinar one. All can combine together one. Okay. Then also you can see here. You can see the moving averages. Okay. Just now during our first topic, you have to wait until the moving averages above is like stop price above the moving averages. Now the setup they are using here is the same as what I just taught one. 5, 10, and 20. You can see this one is my chart. I open is this chart setup already, never change one. So what I'm sharing to you all is the real trading strategy that I use one. It's not like theory one. I don't like theory one. Or it's the practical one, can use one. Okay, so basically you can see, okay, the stop price started to come above the moving average. Yeah, okay. The stop price, the stop price start, the short-term stop price, the short-term moving average, the short-term moving average start to go up above the long-term moving average. What does it mean? It means that, like we just now discussed, is that in short time frame, in recent, the stock price having momentum, the stock price is powerful. The stock price is going up. Okay. So this is the strong setup lah. Strong setup. Okay. So you can see, okay, see, okay. We bring one more point. This part, you see, when it retraces, during a healthy retracement, bear in mind, just something I said, bear in mind, is that the volume must be obviously low. You can see this part is the up, this part is a down. Okay, you can see here. Okay, the green bar is a lot, is very huge. Then the retracement volume bar is little only. If imagine this retracement volume bar is just like quite parallel to the upside bar, then I will be scared. I will be very, very scared, because it means that previous day a lot of people buy, a lot of people transacted lah. Okay, then in the end this counter is up, but today a lot of people transacted, making it down. Then the volume will be crazily scared. Okay, if a healthy retracement, as we mentioned during the webinar earlier, before we go into the case study just now, I have already mentioned is that extra point. During a healthy retracement, the volume must retrace in the low volume. Okay, do you all remember this that I just mentioned? Okay, all this you all can combine together one. All this is the strategy that we really use one. Okay, if all good, comment a good for me. Okay, so I know you all really able to catch all the info here. Okay, so hope I clear something for you all. Let me see. Can you show us how you set on screening uptrend stock? This one will be a little bit sensitive, because this one I share to my member group, but I can share something to you all, is that you all can go to top volume, like just now I mentioned. You go into a top volume, like just now top volume list, then you go to check out, to skip all the stock structure warrant, all the penny stock, then you focus on the counter. Like for example, just now we see capital A is in the top volume list ma. Then you see top volume. But this one already, like for me, I will see if there is any better one. Why? Because the breakout part is here ma. Here is the breakout part ma. Why here is the breakout part? Because here the MA start to go up. So this one is the breakout point, is the starting point. So here is like, we call it in the middle lah. So if you have better stock, you can see the better stock. Okay, so you see from the top volume, then you go and check out. The setup of the counter in the top volume. Okay, the other one just now we see what's that? Artronic, for example, Artronic. Okay, Artronic. Okay, you see Artronic for now is safe. Probably is quite safe, because yesterday strong green bar, and today it retraced with healthy volume. Okay, so you can see whether this counter still maintain above the MA. Okay, so this counter you can look into. You study like this, you analyze like this, so you can filter through the top volume. Also, you can filter through the top turnover. You go to KYC screener, very easy one. KYC screener quite useful actually after it upgraded. Okay, so top turnover, top volume, you can go and check out. But for the top turnover, top volume, and one more is the top gainer. But the top gainer, right, you skip the top gainer percentage. You go for the top gainer, because the top gainer percentage, it will include the penny stock, and also it will include the structure warrant. Because like we mentioned just now, the one bit of the penny stock is 33% already. So if you are looking in the top gainer percentage list, you will see all the penny stock one. So you just skip it. Okay, so you can filter from the KLC screener list, top volume, top turnover, and the top gainer. Okay, skip the top loser. No need to see one. Okay, so in then maybe you see Patama. This one is the stock that I'm looking also. Why? Because you can see okay, it goes up. If you miss it, then you just wait for it to come down. Okay, you see it is still above the the short-term moving average. This one 5 days, 10 days is still above the moving average. Okay, still above the moving average. And the stop price, you can see the volume, the retracement volume is lesser than the upside volume. Okay, you can study through this way, but if better, the red color volume, if better lah, then the lesser the better, the lesser the better. But in this case, still okay lah, still okay to accept. Then we will analyze through this way lor. Okay, meaning how come we were able to spot this counter? Because this counter few days back is inside top gainer, top volume. All this can see one. Meaning 1 week back, you see this counter already go out. You spot it in the top volume, top gainer list already. You spot it, then you monitor it. Because too high already takkan you go and chase at this price too high already. Because in short term, it's going out 30% already, too high. So we just wait for it, monitor it, we wait for it to come down. Then only we look into it for here, then we can maybe do an analysis. Okay, support is this zone. So as long as it's above the support zone, so this counter considers safe, then we can monitor it for the upside. This is the analysis way. Study from the list, analyze, monitor, study from the list. Okay, so specific screener to find this BB counter. Actually, we got, but also in the privately used, so we cannot share here. But like we mentioned just now, we can use the public list, the top volume list, all those lists to spot the good counter. Okay, then is TradingView the best trading tools in your opinion? Is it worth the subscription or is there a free alternative tool? You can use, I would advise two. One is the TradingView, the other one is the KLC screener. Because KLC screener is cheaper, if you buy the live data, only 50 ringgit per year. But if you buy the live data from the TradingView, you have to upgrade to Pro account first. Pro account, I don't know how much, but I think it's definitely more expensive than KLC screener. Because I'm using premium. 1 year, I think is 2K over. But normal people, I would advise is that Pro account already enough if you are going for the TradingView. Just that if you just want to have the live data, you can go KLC screener to subscribe, only 50 ringgit. But if you want to have the filter function, the screener function, KLC screener, sorry, TradingView, because KLC screener, it can only screen by the those FA info. Like I tried the screener before. Not as widely range lah. I mean the function not wide range as compared to the TradingView. So I hope I answered your question. Then what do the colors of volume indicates? Is it important for trade? Yes, of course. Because okay, the green color meaning the price is going up. The price is going up, so it's green color. The price is going down. The price is going down. Is red color. The price is going down. Is red color. Okay, so for us, I because we get used to it already. I will see the bear chart. I like to see the bear chart. Actually, you no need to have quite a lot of fancy indicators one. Like people, some of them they use a lot of they like half of their chart is maybe 3 or 4 indicators down there. MACD, RSI, KDJ, Williams, OBV. Wow, really crazy. Too much already. But for me, I like to use MABB and also see the bear chart. Price movement. Price movement is the fastest. What does it mean, price movement? For example, okay, let's say a very good example. Let's say I will draw a line here. For example, I will draw a line here. Then if let's say the stock break out this zone, if you saw happen, you monitor it at that time, or you can set an alert here. Okay, if you can set an alert here. Okay, but this one I miss also. Okay, so when it breaks above this zone, then you can monitor. You can see, okay, this zone is good zone, like that, it will be more faster, will be faster than, using the indicator. So I like to see the bear chart also. So if I using the bear chart, then you see in this chart, what does it have? It only have green and red candle, green and red volume. That's why we always look into all this info only. So it's very important for us as a trader, I would say, for volume. So I hope I answered the question. Well, the green color means that the price is going up. The red color means that the price is going down. Okay. How to exit strategy using a BB or MA strategy if price goes down less than a bit? Price goes down less than okay. This one, that's the reason. That's the reason. Actually, if you all able to listen carefully for this webinar, I believe you're all able to learn a lot, because all this information is the real trading strategy of us. Like for example, okay, sorry. Okay. Let's say like this. Okay, you see, actually the same one. You see, for us, we see like this. This part is what? This part is the Bollinger Band breakout, Bollinger Band breakout, go up. It never break below the MA10, MA5 much lah. Like for this case, very strong uptrend. Like I will always tell my students, strong uptrend, it will usually above the MA1, MA5, MA10, it will usually above one. If it start coming down, meaning the range there is not as strong already. It's not as strong already. Maybe if let's say this zone, okay, if let's say it breaks below MA10 already, you want to sell, you can sell. You still earn a lot. Maybe you might not able to win this part, but this part is more towards sideways, okay? Then you can aim for the other part, this part, okay, when it start crossing again, okay? Then here, you can sell here. When it start below, goes below MA5, cross down MA10. This is all the exit strategy, Like for this part, if the price never break below, the red color one never break below, potentially it might go up also, okay? It might go up, like that, okay? It might go up again, potentially, okay? So if it breaks down, then you can exit, So all this is the exiting strategy. That's why we shared earlier, we share about the moving average. Because moving average for us is one of the exiting strategy. The one is, we call it, direct translate, passively exit, meaning when the price goes down, the time only you exit. If you actively exit, meaning the price shoot up to your desired point, then you exit. For example, let's say you have already entered near this zone. Okay? Then when the price shoot up, maybe you are aiming to the resistance. The price shoot up, okay? Then you aim for a resistance, maybe 10%, okay? 220. Then you exit, you can exit here also can. You can aim for maybe 240, okay? Then you exit here. Also can. This one is that when the price hit your own desired point, then you exit. If not, then you wait for it to see whether it's sustained above the moving average. If it's not sustained, if it break below, then you sell here, you still earn quite a portion. Okay? If it continue going up, then you continue to hold your counter. Okay? This one is all the choices. Passively, actively, all are the choices. Okay? So I hope I clear your question. Yes. Do Bollinger Band and volume was a shorter time frame, 5 minutes chart? Yes, but as I mentioned, prefer to be, you can see day chart first. You see day chart first, then you go to 15 minutes chart. Okay, you go to 15 minutes chart now. You go to 15 minutes chart. So if during the day is the active counter, you go to the 15 minute charts, you're able to see something instead of 5 minutes. 5 minutes and 1 minute chart, I would advise is that for IPO. For IPO first day, the time, very super active that time. Only you use the 1 minute chart, 5 minute chart. The rest of time I will also use 5 minute chart, but I will still refer to 15 minute chart first. So the strategy is still useful. But anyway, all that is the indicators. So like I mentioned just now, it's preferably for us to learn the price movement. Price movement is the bear chart. You see the bear chart, but this one is another topic we are not sharing here, but just that I want to add extra point here is that, but for me, I like to see the price movement. So very easy one. Maybe you draw a downtrend line, downtrend line, okay. You draw a support, okay. All this is the like price movement, so will be faster. If you're able to know all the drawing already, then you go to 15 minutes chart. You can also draw the same. You can also apply the same strategy. Okay. Okay. So I hope I answered your question. So I think that's all for the presentation. You all can use the strategy and you all can look into all the thing yourself. So if this strategy, this webinar, you all learn something, you all can comment a SWC for me, which is, you can see from my name. Okay. SWC is our page. So I hope you all learned something. Thank you. So I pass the time to Shane.
Thank you so much, YC, for sharing with us a lot of these live examples and how we can use these indicators for trading strategy. Appreciate that. So today you did my job already to moderate the Q&A. All right. So thanks, YC, once again.